In the previous video, we built together a very viable and very robust breakout trading, day trading strategy on Nikkei market. It's an income breakout trading, day trading strategy for the 2026. In this episode, we will make the strategy even better, again with some very simple yet very powerful techniques. So let's get to it.
All you need are breakouts, set your spirit free.
Okay, welcome back everyone who's just enthusiastic about breakout trading, and we're going to continue with what we started in the previous episode. We've built amazing Nasdaq strategy together, and now we're going to improve it significantly. So let me get directly to it. So what we're going to do today, we're going to use the BreakoutOS again, and we're going to improve it. So we're going to use an improve module, and we're going to use the Smashing False Breakouts Pro, which is actually a major way to improve your breakout trading strategies. So everything in breakout trading is actually about proper timing. You need to understand this. Everything is about the proper timing. Now, there are ways to improve your timing through low risk techniques. Low risk means there's almost zero risk of curve fitting. And these techniques are related to proper timing management. Now, timing in breakout trading can be split into 4 different levels. You can time your trades on general level, so it's called general level timing. Then you can have also system level timing, volatility level timing, and market level timing. Each of these is completely different approach. You can combine them, and I already recorded a bunch of timing videos here on this channel. I already described this perfect breakout trading pyramid many times. I already explained how to smash false breakouts, so you can go to my channel to past videos and rewatch some of these videos. Now, this is what we're going to use today to improve our Nikkei 2026 income strategy. So we're going to load the data. Okay, that's the strategy. That's exactly the same strategy we produced in the previous episode. So absolutely same strategy. And now what we're going to do, we're going to use some of these levels of improvements, the timing improvement. So in the Smashing False Breakouts, we have the general timing, we have the system timing, we have the volatility timing, market timing, and some additional techniques. So there's a lot of different techniques, again, low risk techniques, which do not possess risk of overfitting, which can help you to improve your strategies. We don't have time to go through all of them, maybe in some future videos. Actually, I plan to do many more videos on improvements and on smashing false breakouts, so don't forget to subscribe because much more is coming probably already next week. There's a lot of demand of this topic. So we're not going to go through all of them. We're going to use just one particular area today. Now, first of all, to understand, to improve strategies, you can use the traditional technique, which is like filters and indicators and all this way, which basically leads to overfitting, right? That's what a lot of guys do. I want to improve this strategy, and I'll stack filter on filter on filter until your strategy is perfectly overfit, perfectly optimized, and completely breaks in live trading. Like that's not what we do here. That's not what we don't want to do here. We want to use really low risk professional techniques, which we have here in the Smashing False Breakouts modules. And of course, whenever we deploy techniques for strategy improvements like this, we again need to use in-sample and out-of-sample data. So that's what we can do here. We split the data. Here we can use the in-sample 20%, out-of-sample in-sample 80%, out-of-sample 20%. That's completely fine as we have it right now. It's the proper way to do it. And now what or which techniques we're going to use? Well, as I said, there are a lot of techniques. One of my favorite is using volatility. And now please pay attention. In breakout trading, everything is about volatility. We're using volatility as the key component of a breakout strategy. We're using ATR as a volatility level breakout computation. So in breakout trading, volatility, it's a master component. A lot of things are in breakout trading related to volatility. Now, what one of my favorite technique is basically taking an existing strategy and analyzing how differently it performs in different volatility context. So market can be seen contextually. We have different volatility levels. The volatility changes all the time. So we constantly have different volatility configurations in the market, different volatility environment. Now, if we can measure somehow and compare and quantify, that's the key word, quantify current volatility environment, we can take an existing strategy and see how it works differently in different volatility market configurations. Now, how do we do this? The easiest, very powerful way, and now listen, I love easy techniques, right? Like easy techniques just work perfectly. I'm not this guy, everything needs to be overcomplicated and billion of stuff and then it just breaks down. Simple, but common sense. So one of the simplest way is just we simply take ATR, some period, let's say 20, and then we take a range, let's say this is up to you, I'll talk more about it in a minute. But let's say last 100 days, and we take the highest known ATR value for the last 100 days and the lowest one, and then we see where the last measured value fits in. So we basically create this band, highest ATR level, lowest ATR level known during the last 100 days, which creates a band. And then we have the current value, the last known value of the closed bar. And then we take this range and we split it into bins, 2 or 3 bins, and we see where the current value fits. So this way we can measure, we can compare our strategy in different volatile environments. And then we shift this bar by bar. So every bar, like we forward test, and we can actually see how different entries in different volatility context, different volatile environment impact our strategy. And it's actually very, very easy to do here in the BreakoutOS with the Smashing False Breakouts module. And that's what we're going to do right now. So we're going to use the volatility timing, okay? And we're going to use volatility bins. And volatility bins is exactly what I've just described. So this is basically binning highest and lowest volatility in either long-term, mid-term, or short-term. And I can change the number of bins, okay? I can do 2 bins or 3 bins or 4 bins or whatever I want. So first thing I need is just to make sure that I'm not overfitting. Listen, I already explained this in the previous video. Everything is about robustness. You must not cheat here. So whichever technique we want to deploy, we want to do it on in-sample data only. And then we want to cross-validate or validate on out-of-sample. So we make sure we're not overfitting and over-optimizing. And what we do here, actually, we split, so we only use the in-sample data, first 80%. Now, in BreakoutOS, and everything is pretty much described in detail here, we can take the just short-term high and low of volatility, which is something like a week, mid, which is like a month, or long-term. Now we're working with a breakout trading, day trading strategy. So day trading strategy means all the changes are pretty fast. So usually with day trading, we're inclined more towards short-term binning. Okay, so here we pick short-term binning, and we immediately can see that if we take short-term binning, that means last week high, low volatility, and where each trade fits in, we can see immediately that our strategy performs much better in the lower half. Okay, so now we basically split the volatility into low volatility, high volatility, and we can see that our strategy performs significantly better in the lower volatility, and we can compare it. It's quite significant. So you see that if we use this low bin number 1, now we're increasing average trade from 160 to 306. That's almost 100%. That's unheard of. We have almost the same PL, 33 versus 31, but we're slashing drawdown from almost 7,000 to 1,500. So we're actually improving net profit drawdown ratio from 5 to 20. Again, major improvement, like a huge improvement. And we can see if we do this with, we can do this with 3 bins. So 3 bins, similar, like the first one, really powerful, which gives us confirmation that our strategy really performs well if the entry happens in low volatility environment, which kind of makes sense as well, because low volatility environment means that the volatility explosion can be just behind the corner, which can serve very well to our trades. And then if we split it into 4 bins, we still see the same picture. So this gives us a lot of confirmation that focusing on low volatility environment trades, that's the solution with our strategy. That's the solution. Now, I personally like keeping things simple, so I like working just with few bins, and I'm completely fine with 2 bins only. And what I do now is just I need to verify this works on out of sample as well. So this is in sample. So what we need to do now, we need to review all the data and see if this works out of sample as well. And as you can see perfectly, I mean, like this matches 100%. So here we are. This is our improvement. And guys, it took, I don't know, it took like 8 minutes. In 8 minutes, we turn this already good strategy into this, which is significantly better. Have a look, like in sample, out of sample, all the data, significantly better. And the only thing we're doing is just we're taking last few days. And now, again, you can optimize this, okay? So you need to do a little bit of your testing and work as well. So we're taking ATR. This one was, I believe, average true range 5. We take last few days. Now you have to play with different period, and we just split into 2 bins, and we prefer the lower volatility. You can play more with this. You can a little bit optimize it further, or you can use the Smashing False Breakouts Pro module in the BreakoutOS with all the instructions below, and just follow the process how it's built in here. But that's the result, and we've done incredible improvement in no time. Now, I know that you might be asking, is that all? Yeah. Like, what do you expect? Like, should we go forever? Like, should now we be complicating, overthinking? I don't know why. Like, some people love it complicated, love it. And they believe that the more complicated it is, the better it is. I'm not of this philosophy. I like to combine very common trading sense. I'm a trader in first place, with simplicity, which gives me also a lot of understanding and control, and improve strategies in ways like this. So here you are. Here is your strategy. Do whatever you want with it. Please let me know if you like this. Let me know your thoughts below the video. Now, again, if you are skeptic and cynic and everything must be complicated and you're like, overfitting, blah, 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 fine by me. Then this stuff is not for you. Do it your way, complicated way, that's fine. But if you like simplicity, common sense, trading logic, guys, I hope you took some value from this and you will be able to use it somehow. Now listen, I'm going to provide many more examples and strategies and smashing false breakouts improvements like this. So don't forget to subscribe, because already next week much more is coming. I'll be going on with series and with improvements like this. But overall, remember, trading, it's up to you. You want to make it complicated or simple? Completely up to you. So I hope to see you next one. And meanwhile, happy trading.